Crypto Billionaire 69 back with another daily in-depth technical analysis video on Dogelon Mars. It's great to get straight into the charts. The global crypto market cap is down 3.22%. Easy money. We are holding above the $35,000 levels on the overall market, which is a beautiful thing to see. And what is even more beautiful is how low we still are with Dogelon. Last time we were holding around the $35,000 levels, we were around these 10 levels, and now we are basing around these 8 levels, which is a very, very good sign. Let's check the Crypto Fear and Greed Index real quick, just to see what the sentiment is looking like. We are in extreme fear still. However, we are not in the 10s anymore. We just broke the 20 levels, which is a good thing. What we need to watch for the upcoming days is this, and I will go over it on lower time frames in a second. But before we do that, I am going to chart out what we are looking like overall. Gain perspective on how the charts are moving, how the price action is flowing, and what we need to stay tuned for. So this monthly candle needs to close above this 933 level in the next 3 days. If we see that, that is a very good sign that we will push higher above this 0.618 Fibonacci level on the monthly candles and hold before our next spike. All right, cool. When in doubt, zoom out. Let's go to the weekly candles. See this doji candle? That indicates neutrality. This right here is called a doji candle, D-O-J-I. All right. That's very big on day trading. If you want to trade intraday, let's get straight into the lower time frames. Lower as in, we'll start with the 4 hourly candles, then we'll go to the 2 hourly candles, and then we'll go down to the hourly and 30 minutes. All right. This is what we're looking at. We are currently testing this resistance over at these 884 levels. This is a previous big dip that we saw major buying pressure, so it's going to take a little bit to get through. And these two are also supports resistant lines that we need to watch in the upcoming days. This is the top line we want to break through, okay? This 978 level, we want to break through that, hold above it, preferably if we can break through and hold above the 10 levels, which within the next 2 days, that will be the best option here. Realistically, within the next day and a half, because 2 days, we will most likely have broken this trend line if we do continue to move upwards or downwards, because next 2 days we'll break through this already, so we want to watch this. This is a nice little uptrend we're in right now. However, it could break down through this trend line. Now, I don't like trading on trend lines because it doesn't really do the job, but it's a very weak support system. So if it breaks through this, that doesn't really matter. It just shows that we will be going back down to test the previous horizontal support lines, all right? Horizontal support and resistance are really where it's at. These trend lines and pendant patterns and bullish flags, they help people lose a lot of money because that is not the right way to trade. It is not the best percentage of it does not have the best percentage of winning. All right, there we go. Let's get straight into it. So I'm just gonna delete this support line, but this is the trend line we are in. If it comes back down and touches this, that just means we're making higher lows. Buying pressure is stepping in. It's a good little support line to follow. However, it's not the best level. What you should be looking at for major support are these horizontal levels. So we have one here at the 8s. We have one here down at the 6.5 levels. And those are the two major levels we need to watch at this moment. 6.5, yeah. So these are the two major levels. If it does come back down to touch this, that's completely fine. We just want to see some buying pressure, some volume step in to push it even higher, breaking this previous double top at the 930s. However, that's why we have this little trend line to see how it holds up. All right, cool. We want to see it hold up around these 870 levels within the next today. We want to see it close above the 870 levels today in order for it to confirm that we are still following this trend line. Cool. Now, keep all things in check. The overall market does have to continue to hold support where it's at or move higher in order for this to break previous resistance at these 9, 7 levels and the 10 levels, and move even higher coming into the next weeks and days. My beautiful friends, Crypto Billionaire 69. This is an in-depth technical analysis. These are the 4-hourly candles. Let's go down to the hourly candles. We're going to skip a couple just because there's no point of going over every single one of them. All right, this is what we're looking at here. We have seen some pressure come up. Volume did spike, which means there are some sellers taking profits around this level here. All right, it's a completely fine thing. Those sellers probably got in around these 5 levels, and they're completely fine with a double. That's why they're taking profits, taking 100% profits. Beautiful thing. Now, these are the day traders. That's what you can do with day trading. Just algorithms. It's mostly algorithms and computers making these trades. However, they're trading intraday, which means they're trading within a 24-hour time span. And yes, I know the exact method that they use in order to make money every single day in the markets. And we'll go over some of that right now. So, if you have not averaged in, this is the best thing you can do now. Before we get into that, let's go over previous, all right? Look at this. Day traders got in here and made 100%. It's totally possible, and you can do that using these methods that I'm about to show you. So stay tuned, stay tuned, stay tuned. I'll repeat it one more time. Stay tuned. All right. Look at this. Day traders saw that previous resistance. You got to look at it, all right? Day traders saw that we did break these previous lows right here, all right, at this horizontal line. All right, now they saw that this previous high over here, that is major support, all right? It's the top of a bullish flag, okay? So they saw it and they knew, gotta watch this. In fact, maybe even buy some up. So that is the top of the bullish flag there. And what did they do? They bought it up. Now, it did go down a little bit more because some sellers were scared out of their positions and hitting their stops. Because you got to realize, a lot of the grandma and grandpas, a lot of the retail traders who don't know what they're doing, I just call them grandma and grandpas. It's not a specific domain I'm reaching out to. But okay, a lot of the retail traders have their stops below this previous low. What a stop is it automatically closes your positions. It liquidates it. It sells your position, which pushes the price even lower. Now, the day traders knew this, and the day traders knew that once it goes down below these liquidated positions, they all get liquidated, the price gets pushed down. So they need to look at previous support and resistance and start averaging in. Now, day traders, you can drop time frames, all right? So let's drop time frames to 30 minutes, all right? Now, even this for day trading is a pretty big time frame. I normally trade when I'm day trading, or I used to day trade during coronavirus, turned $1,000 into over $10,000 in a week just using these methods. So I would usually trade around the 5-minute candles, 5 to 15, 30 to keep perspective. But 1 and 3s, they're pretty small. They're really small. Unless you're really looking to average in, you're coming close to a support line, then you can drop time frames. Especially if you don't have the level 2, you can't read the price action, then dropping into those lower time frames, the 1-minute candles, 3-minute candles, can really show you what volume is stepping in. If the buyers are wanting to accumulate on that price, and you just follow along with the team, you follow along with the big money and the algorithms, really. So, my beautiful friends, the day traders saw it's coming down at this previous support. Now, remember, this is from months ago, okay? They saw this, and they had buys in, so they bought. Now, what do you do then? All right, they see their trade is going the right way. The next what they got to watch is previous resistance. Boom. They saw that, came back down, based on top, moved higher. Now, what's the next resistance? It was here, and then it was this double top that we reached over here. It was more of a consolidation period, and they consolidated here, okay? Came down, faked out a few algorithms, most likely. The algorithms are versing each other. It's just the different banks. So the algorithms have a technique they use where it moves up, and it moves the stop along with it. So as the algorithms buy in here, boom, 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 moves up, moves the stop so they can't lose any money. And you can do this if you'd like, but it's not the most, it's not the best way to make a profit. So moves up, moves up, moves up. Boom, it sees it's trading in this range. So what does it do? The algorithms push it down. It hits those stops of the other. It's a whole separate thing. It's like two different teams, but hundreds of different teams warring against each other. That's the beautiful thing about these markets. And we're human, so we can see it. All right. So they see it move, hits the stops of the algorithms, gets pushed back higher, consolidates again in this range. And then this is another double top, breaks through with volume. All right, doji candle fakes them out again. Comes back down. It's a beautiful thing. Now, if you're a human and you're trading this is what you want to do, all right? So, as it comes up, comes up. Now, you know this double top is coming up, okay? You don't really see some selling pressure. Now, it is making higher lows or along these lines here, all right? Boom to boom. Higher lows, so you don't got to worry about that, all right? You don't have to worry. Boom. It's making higher lows the whole freaking time. Now, this is when you have to worry. Whenever you see a big dip like this is when you want to average a little bit out, all right? Average a wee bit out. Now, there are multiple other methods you can do. This is simply from seeing a dip, okay? There is methods that you can get out right at the top, and I could teach you guys this, but hey, I don't got the time right now. Go check out the course. The link's in the description if you're really interested in all that. But yeah, this is just one method. So you see the selling pressure is taking place here. You want to average a little bit out, mitigate that risk. Because remember, your break even is back down here along this previous support line that you went over months ago. So you got in around these 542 levels. Up here is around the 8 levels, my friends. You just made a good 60, 70, 80% profit in a couple days, around 2 to 3 days. So congratulations. Take around 25% out. Now you see it move back up. You don't want to add, you just want to hold, okay? These type of trades, you really don't want to add unless some major news comes out, major catalyst. So you see it drop back lower, you want to hold, okay? Now, you want to keep in mind, if it drops below that 50% line, which would be guessing around here, 50% is overall spike, okay? That's when you want to start really paying attention, but it's not below that 50% line yet. It's just consolidating within these ranges here. Let me just delete these so it's a little more compact for you guys. This is all we really need, these lines. We need that 50% line. All right, cool. So see it come back down, buyers step back in, push it higher. Beautiful thing. You'll be holding that 75% you have left. Makes higher lows. Boom, boom. You're literally sitting pretty right now. You're just waiting. All right, you have your alerts on. You could be at work, whatever. All right, comes back, breaks these previous highs. Now it comes up and breaks here. This is where a lot of retail traders will get screwed. They'll get pump faked because it breaks through this previous all-time high, this previous high here, and they buy in on a breakout trade because they think it's going to the moon. And you're buying at a high, first of all. You never want to do that. And that's why it comes back down, because the algorithms see all these retail traders pouring their money in, and they're like, oh no, we can't move it yet. So it comes back down. It bases on the top exactly what the retail traders want to see, and then it comes back down. Boom, boom, boom. Tanks to the 50% line. Now this is when you want to really watch, is this 50% line. Because you don't want to have it come back down too far to your break even, which is right back down here. So immediately what I would have done, what you should have done if you're following these methods, is once you see this come up, come back down and result in the doji, take some profits, take 25% more. So now you're 50% out. You have made a gain of at least 70%, and you're sitting pretty. All right, so gain of 70%. You see this doji candle. The reason why you would want to get out is because you know the algorithms. It's all algorithms versus humans. You know the algorithms faked all the retail traders out, all the breakout traders came back down. All right, you want to average out a little bit there, because that's not a bullish sign. If it was bullish, if it was going to break through, it would have broken through here, created massive volume just like this, but ended in a candle that looked more like this. All right, not a doji candle. Doji candles are very much neutral, which means it's neither bearish or bullish. So Boom, moves back down to the lower side, 50%. You want to watch here. If it drops below this 50%, you might as well just average your whole position out, because why? I would rather take a profit here than hold on to it as it comes back down to my break even, and potentially lower. So I would mitigate my risk, take a profit, move on to the next trade. Now, once you make one trade on here, you move on to the next coin, my friends. If you're day trading, do not try to trade the same coin back to back to back, because there's a thing called revenge trading, and it's very emotional. And you'll end up losing a lot of money. Okay, we are 15 minutes in. If you stayed this long, you're definitely interested into day trading. Now, I go over all this stuff and so much more in the course. Go check it out. Links in the description. It's currently 1/3 of the price. So, I mean, hey, you're getting a killer deal. But this is for real, only serious day traders. If you're not taking this seriously, then it's not for you. If you have any questions, email me at mycryptomoves@gmail.com. But my friends, the markets are looking beautiful right now. We just got to hold. Currently, I'm not day trading. I'm simply holding long term for months, 2 years, because I don't want to pay that short-term capital gains tax of 35%. So yeah, I want to pay that 15% capital gains tax, and you'll just make more holding in the long term instead of day trading every day. Day trading is more for those who are very emotionally stable or want to. You got to be disciplined, and you can make so much money. You can make like 5x in 1 week, but you got to be disciplined, or else it won't work. So if you think you're disciplined, if you think you have it, I've done it before. I have the methods, and yeah, it's just I can't simply stare at a screen. I have too much stuff to do in the day-to-day trade. Now, it's a great way to make money, but life is much more than money. For me right now, I'm at a comfortable point, so I would be fine not making another dime in the rest of my life. That's where I'm sitting. But if you want to make real money, you got to put in the effort, and this is where you get started. So, Crypto Bean is 69. I'll catch you guys in the next video. I love you guys. Peace.